And welcome back to Worldwide Exchange. We're continuing our conversation with Steve Odland and Jay Timmons. Steve, I want to come back to you. We were just talking about China before the break. I want to tell you about the potential for a China impact when it comes to these tariffs. We have not heard that China plans retaliatory tariffs. However, some people are really concerned about what this could mean for the U.S. China dynamic. When you're talking to CEOs, are they worried about this trade war, the idea that things could escalate from here?
Yeah, I mean, CEOs are worried about all of this, and China, provides they have become our supply chain, and we have moved over the past 20 to 30 years to a globalized, integrated supply chain with Canada, Mexico, and China providing low-cost labor. You don't undo that in a matter of months, and so you're going to have, even if you said, okay, this is a one-way trip, we're going to put these tariffs on, it's going to be forever. It's going to take years for manufacturers to be able to respond to this. So, you're dealing with a very difficult situation. You've got the geopolitical overlay with China as well, and the friction in the South China Sea over Taiwan and other things. So this escalates the danger in the world on top of the costs of all of this. So you've just seen tariffs go on 41% of our total imports into this country. 41%. That has a material impact that cannot be just undone or adjusted to in a very short period of time.
So, Jay, coming over to you, I mean, Steve hit on it. So many things are made over in China, shipped here to the U.S. When you look talking to the manufacturing companies that you represent, how concerned are they about retaliatory tariffs coming from China, just the potential impact this could have when it comes to trade relations between the two countries?
Well, I think we have to look at the fact that 95% of customers reside outside of the United States, and we don't want access to those markets to be curtailed. But on China specifically, we negotiated a phase one trade agreement in the first Trump administration, and I don't personally believe that China has lived up to that. And what we really expected was we expected there to be targeted, very strategically targeted tariffs implemented that would deal with things like intellectual property theft or subsidization or dumping from countries like China. And I have to say that the North American tariffs that were imposed were a little bit shocking, a little bit surprising. Most CEOs, most companies did not expect that or see that coming, and the disruption to the supply chain is going to be pretty significant here in North America. China's a whole different situation, and one that obviously we've been dealing with for a number of years, but North America is now a new territory for us.
All right, Steve, I want to come back to you and talk about the potential impact of these tariffs. A lot of people see it as inflationary. A lot of concerns about bond yields possibly spiking on this news. We're going to hear from the newly confirmed Treasury Secretary later today. At the same time, some concerns about inflation when it comes to the Fed and the idea that we may not actually be on a cutting cycle anymore. I want to talk to you. How do CEOs view all this, the inflationary impact and also the potential impact on the Fed?
Well, I think as a couple of weeks ago, CEOs thought that they understood what the rules of the game were and what was going to happen here over the next couple of years. And they breathed a sigh of relief because now we had some level of certainty. This throws all of that back up into the air. Certainly bond yields will be under pressure, not only because of this alone, but then you add on to it that they're talking about lengthening the tenor of the debt, U.S. debt. And so therefore that puts pressure on the long yields, which then puts pressure on consumer borrowing rates, consumer mortgage rates, and so forth. That hits the housing market, which has been hugely inflationary and problematic for us. So all of this puts, this could take us down to almost no growth, which feels in the United States like a severe recession, even if it's not negative. And then you look at our trading partners beyond Canada, Mexico, and China, the other 60%, and what do they think? And so they're going to assume that everything's off. So the whole thing gets thrown into the wind, which is why I come back to this has to be, and when you're negotiating, you don't lay out all of your tactics for everybody to see, but this has to be the beginning of the USMCA renegotiation. Therefore, the question is, what do they want? What concessions are they looking for from Mexico and Canada in order to stop this? They've talked about the border, immigration, drugs. Okay, that's not perfectly controllable, as we all know. It can come from many sources. So you have to get to what are the metrics that they're going to look for.